Well, this is a pretty cool topic. I want to talk to you today about the top 20 tax deductions for Airbnb and VRBO hosts. What are the best rental host tax deductions? Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as terrific as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to really talk to you about the 20 best tax deductions for Airbnb and VRBO hosts. As a rental host, you can save hundreds and sometimes even thousands of dollars at tax time by deducting business expenses. And that's because every time you write off an expense, guess what? You lower your taxable income, which in the end puts more money into your pocket. And short-term rental marketplaces such as Airbnb and VRBO, they have made it very easy for homeowners and property managers to market their rental property. And even if we are in the midst of a pandemic that has seen business go down in that industry, things will pick up. Things have already started to pick up. All right. So experienced operators know that in order to succeed, you need to treat your short-term rental like a business. And the cool thing here is that the IRS agrees. So if you already operate like a business, you also get business-like deductions when income tax time comes. And now a few things to keep in mind. When it comes to deducting business expenses, there are certain regulations you need to follow, and those are strict. The IRS is very, very, very strict about those. So business expenses must be both what? Ordinary. In other words, they are commonly accepted in your trade, and they must be necessary. In other words, they must be helpful and appropriate for your business. So ordinary and necessary. So the expenses that I'm going to talk to you today about will fall into this category. They will be ordinary. They will be both ordinary and necessary, not either or. It has to be both. And the IRS requires documentation of any business expense you deduct. That's why it's so important to track your expenses during the year, right? Because guess what? If you don't track your expenses, you might be a candidate for audit, and you don't want that. So you want to save your business receipts for at least 3 years after you file your taxes. And what about, let's have a quick conversation about income taxes versus lodging taxes. So keep in mind that these deductions relate to federal income tax. So it's important to understand the difference between income tax, which you pay to the government based on your income, versus lodging taxes, which is a tax your guests pay on the cost of renting short-term accommodations from you. And you as the host, as a rental host, don't actually pay lodging taxes, but you are responsible for collecting the tax and passing it on to the appropriate state and local tax authorities. And there are no deductions you can claim for lodging taxes. So basically, the best way to understand lodging tax is just a sales tax. It's similar to a sales tax. So you just collect it and pass it on to the authorities. Now, when it comes to tax deductions for Airbnb and a VRBO host, you have something called a 14-day rule. This is very critical. I want you to pay attention. So to maximize your federal income tax deductions, your home must be classified as a full-time rental business. What I'm trying to say here is that your home or apartment must be used by you for your personal stays for less than 14 days or fewer, or 10% or less of total annual rental days, whichever is greater. I want you to keep in mind that days primarily spent repairing or maintaining the property don't count towards personal use days. So if you use your rental home for personal use for more than 14 days a year, you are only allowed to make deductions in proportion to the amount of time the property has been rented by guests. And if you rent out part of the property, you will only be able to deduct expenses in proportion to how much of the property you rent out. Very important. And a benefit of using your property as a full-time rental business is that you may be able actually to deduct up to $25,000 in losses each year, depending on your income. Think about that. You can deduct up to $25,000. Obviously, if this is a business for you, you're not thinking about running a loss, right? You're trying to be very honest and just run your business as a normal and reasonable person would. But things happen, if you happen to be if you happen to have experienced a loss, you can deduct up to 25K. And if your property is only a part-time or rental business, you will not be able to deduct a loss when you spend more on the property than you earn in rental income. On the other hand, if you offer your property for short-term rental for only 14 days or less during the year, and you use the property yourself 14 days or more, or at least 10% of the total days you rent it out, then you do not need to pay income tax on that rental income. You do not need to pay income tax on that rental income. So now that I have actually clarified things a little bit and sort of explained things to you, let's first get into the top 20 tax deductions. Number one, you have mileage. So you want to keep track of all your business related trips, right? While there are lots of ways to do this, like you can take odometer ratings before and after trips. The easiest way we have found in our research is to use actually an app like MileIQ or Stride. There are other apps out there. We actually reviewed the best tracking apps on the market, so you might want to double check that video. And if you use an app like Stride or MileIQ, you can record mileage while you drive. So when you travel overnight for business related to your vacation rental, you can deduct expenses such as airfare, accommodations, mileage, meals, and other travel expenses. And this could include things like traveling to your rental property to do repairs or maintenance, learning related to your rental, such as classes, workshops, symposiums, seminars, conventions, or trade shows, meeting with business associates who work with you in your rental business. And the cool thing here is that you can also deduct mileage for travel closer to home in order to visit your property or other related travel, such as going to a store, for instance, to pick up supplies or equipment. It really depends. And one thing I would just want you to keep in mind, though, that any travel related to improvements, as opposed to those for repairs, may need to be added to the improvements tax basis and depreciated. In other words, you have to capitalize those improvements as opposed to the smaller repairs can be expensed, but the big improvements needs to be capitalized. They need to be added as an asset. So if you choose to take the standard mileage deduction, keep in mind that you cannot deduct individual vehicle expenses like gas, oil changes, car repairs, and car insurance. And similar to the home office deduction, the IRS created a standardized, simplified way of deducting vehicle expenses to make tracking easier for independent workers. And so the IRS look at the average cost of operating a vehicle, and they actually came up with a standard rate per mile that independent drivers could deduct. And this is known as the standard mileage method. So for 2020, the rates was 57.5 cents a mile. And in 2021, the rate is 56 cents a mile. Number two, a pass-through business deduction. So we had in 2018, the cool thing, we had a law called the Tax Cuts and Jobs Act, and that took full effect in 2018. And under that law, residential landlords who own their rental property through pass-through entities, including sole proprietorships, limited liability companies, LLCs, or partnerships, they may be eligible to deduct an amount equal to 20% of their net rental income. So this is a personal deduction that can be taken even if you don't itemize. In other words, it is an above the line deduction that actually reduces adjusted gross income. So the QBI is a tax deduction that allows eligible self-employed and small business owners to deduct up to 20%. Okay. Now, in general, though, this is a good limit you have to be aware of. Total taxable income in 2020 must be under $163,300 for single filers, or $326,000 and $326,600 $600 for joint filers to qualify. So the amounts are $163,300 for single filers and $326,600, double that amount for joint filers to qualify. Deduction number three. So number one was mileage. Number two, pass-through business tax deduction. Number three, home office. So the IRS, keep in mind that the IRS keeps a close eye on this deduction. So you want to make sure you only write off your office if it's a dedicated home workspace used solely and regularly for your rental business. So if you have a home office, you can write it off with either the simplified option. So you multiply the square footage of your office up to 300 square feet by the standard rate of $5. Or you can actually use the actual expense method. So you add up the expenditures related to your home office, including direct expenses such as supplies for and repairs to your office. You can deduct this in full, and you have the indirect expenses like your mortgage, insurance, and utilities. And for those indirect expenses, you have to actually allocate the proper portion to your business. So you will divide the total cost of these expenses by the percentage of your home that's used for business. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still having a conversation with you about the top 10, actually the top 20 tax deductions for Airbnb and Vrbo hosts. And we are going number 4, major improvements. So if you have a property that is used for a rental more than 50% of the time, you need to look into section 179 of the tax code. And new updates allow rental business owners to write off the cost of fire and security systems, roofs, and HVACs up to $1 million. Number 5, cell phone bills. So if you use your phone exclusively for business, you can fully deduct related expenses, including the phone purchase and monthly bills. All right. If you also use your phone for personal reasons, you should only deduct the portion used for business. You need to allocate the proper percentage to it. And the best way to do this is to calculate what percentage of your calls were work related and then claim that percentage of your bill. Number 6, bonus depreciation deduction. And another thing that's very important here is that since the 2018, short-term rental owners have been allowed to deduct the full cost of property, such as appliances and furniture, all in 1 year under 100% bonus depreciation. And the deduction applies to new or used property placed into service from September 27, 2017 through December 31st, 2022. So if you are familiar with the whole depreciation thing, the concept, normally when you buy an asset for a business asset, you have to depreciate it over 5 years. So instead of taking the full cost, instead of writing off the full amount on the first year, you have to write over several years. But right now, exceptionally, the authorities have allowed taxpayers until December 31st, 2022 to actually depreciate the full cost of property in year 1. Number 7, we have utilities. So any utility bills for your rental properties are deductible. Here I'm talking about water, gas, electricity, TV, internet, trash removal, and the whole 9 yards. As long as those expenses are exclusively for the property, you can deduct them. Number 8, we have mortgage loan interest. So there are new limits to how much of your mortgage interest you can deduct for your own primary and secondary residences, right? However, and that's the good news here though, these limits do not extend to rental businesses. So what I'm trying to say here is that if you have a mortgage on your rental properties, you can deduct all of the interest. Number 9, credit card and loan interest. So if you use credit cards or personal loans to pay for a vacation, rental, business expenses, you can actually deduct the cost of interest payments on those accounts. And as of 2018, I think I already said that, personal deductions for interest on home equity loans were eliminated altogether, but you can still deduct this type of interest as a business expense for a rental property. Number 10, business cards and printing and copying. So anything about designing and printing business cards is actually a deductible marketing expense, as are all other marketing expenses. So keep your receipt anytime you print or copy work-related materials like marketing flyers, brochures, and office records. And print jobs are deductible. And whether it is traditional marketing or digital online marketing, those expenses are fully deductible, all of them. So for instance, if you hire someone to take care of your social media, or you have someone you hire a marketer to help you promote your business, your rental business on Facebook, you can actually deduct the fees paid to that person. Number 11, property taxes. So personal deductions for property taxes are capped at $10,000. However, similar to the mortgage interest deduction I just spoke about, the limit does not apply to properties operated as rental businesses. So owners of rental properties can take the full amount of property taxes as business deductions. Again, the thing here is that there are two things. You have to keep the paperwork, and you have to show the IRS that the expenses were regular, the expenses were necessary and regular. In other words, they actually relate to your business, to your rental property business. Number 12, folks, you have property insurance and private mortgage insurance. So you can deduct premiums for any insurance plan, including private mortgage insurance, the PMI, that covers your rental properties. As long as the property is a business property, is a business rental property, you can deduct mortgage of the PMI and property insurance. If you prepay your PMI premiums for multiple years, you can only deduct the portion that applies to the year you're paying taxes for. Number 13, guest or host service fees. So short-term rental companies like Airbnb, we all know, they typically take a small percentage from your rental fee, right? You can deduct 100% of this guest/host service fees as long as you have rented out your home or apartment for more than 14 days of the year. Remember the 14-day rule, right? So rental companies they typically will send you a 1099 form. It will be a 1099 NEC form with your annual earnings and will include the total service fees. And you also have marketplace fees. So Airbnb, for instance, charges a host service fee of 3% of the cost of each reservation, while VRBO charges an annual subscription fee or paper booking fee. And these fees are completely deductible, so you want to make sure you keep track of them. And the best thing to do here is to pay them with a credit card or debit card. So the whole transactions are electronic, and at the end of the year you can just track everything a lot more easily because you can go back to your statements, or you can use an app. Number 14, office supplies. So items that you buy for everyday office use like pens, paper, postage, and notepads are all deductible, and you can still write this off even if you take the simplified home office deduction. This is great news here, right? Number 15, professional development. Professional development is kind of cool. Let's say if you basically hire someone, if you hire a coach, if you are attending a workshop, but then you subscribe to a magazine, something that really relates to your industry, anything that helps you foster your business, or anything that helps you elevate yourself as a person intellectually or as a business person, you can actually deduct it. I'll be right back right after this. Don't go anywhere. Number 16, folks. We're here again at number 16, advertising. So when you promote your listings, you want to keep track of how much you spend. So online ads, signs, print ads, videos, website hosting fees, and more. They are all deductible, all of them. Number 17, cleaning and maintenance fees. You can write off any expenses for laundry, for instance, cleaning supplies, professional cleaning services, and maintenance cost. So everything that every activity, every professional who helps you beautify your rental property, who helps you take care of the property and maintain the standard of quality, you can anything you pay to that person, you can actually deduct it. Number 18, furniture, linens, and food. So you want to keep track of the expenses you spend to provide accommodations and amenities for your guest. You can deduct the furniture, linens, curtain, shower supplies, and food that you provide to your guest. Number 19, repairs. You can write off repairs made to your rental property, including repairs to furniture and appliances. Again, the key word here is repairs. It has to be a minor repair. When we have an improvement, when we have a major improvement, you cannot deduct it in full. You have to capitalize the expense. You have to add it as an expense, and you have to actually depreciate it over several years. Okay. And number 20, last but not the least, health insurance. So as long as you are self-employed and you don't get health insurance via a spouse or employer, you can deduct 100% of your monthly premiums. And I want you to keep in mind though that if you receive a government subsidy, you can only write off the amount you pay each month, not the original price of your plan. That makes sense, right? You can't double dip here. And your health insurance premiums are taken as a personal deduction on Form 1040, not deducted as a business expense. This is very important to know. Okay. And one thing I also want to say about the food, you can deduct the food that you serve to your guest, not the food that you yourself, that you eat, unless there are some strict conditions that you actually qualify for it or that you meet. And if this is the case, then the IRS allows you to deduct up to 50% of meals, 50%. But the food you serve to other guests, the food you buy for them, and that's part of the amenities, that's part of the standard of quality that you promise to your guests, that's a 100% deductible expense. So you had the 20, I'll just give you the top 20 tax deductions for Airbnb and Vrbo host. Now, there are some common expenses you cannot deduct, and I just want to quickly talk about them here. So the IRS deemed some common expenses as non-deductible. For example, personal hygiene expenses like haircuts, clothing that can be reasonably worn outside of work, and dry cleaning unless it's for a uniform. If you have legal violation fees like parking tickets or court fees or some kind of lawsuits based on some property violation that has occurred in the neighborhood where the property is located. Commuting mileage. If you work at a permanent office away from home, you cannot deduct commuting mileage. And life insurance premiums when you are the beneficiary, even if you take the policy out to secure a business loan. And I also want to say that there are no deductions allowed for rentals that are hobbies. The IRS has a strict viewpoint about the whole thing, business versus hobby, all right? And so operating an activity classified as a hobby for tax purposes has always been a tax disaster under the TCJA, all right? Now, the thing here is that now you have to understand that expenses from a hobby could be deducted as a personal itemized deduction before. Nowadays, it's no longer possible. This deductible hobby expenses could not exceed hobby income. And the Tax Cut of 2017, the Tax Cut and Jobs Act of 2017 completely removed the personal deduction for hobby expenses. So this means that while the income from a rental activity classified as a hobby must be reported and tax paid, no expenses may be deducted. So the thing here, what you have to understand is that the vast majority of rental activities qualify as businesses or investment activities. However, rentals that are not profit motivated must be classified as non-for-profit activities or hobbies. And if you want to get the most out of your rental, you got to pay attention to taxes, man. You have to pay attention to taxes. And while many tax deductions for your rental business may seem small, they can really add up. So make sure to record your expenses as you go along. You want to keep detailed records of any expenses related to your rental, which will make things much easier when it comes time to file your taxes, as well as in case the IRS has questions. If they have questions down the line, guess what? You are prepared. So both knowing what you can deduct and keeping good track of those expenses can help you take maximum advantage of tax savings on your rental property. All right, folks. This is it for today's conversation. I was having a quick discussion with you about the top 10, the top 20, not top 10, the top 20 tax deductions for Airbnb and Vrbo hosts. Number 1, mileage. Number 2, pass-through business tax deduction. Number 3, home office. Number 4, major improvements. Number 5, cell phone bills. Number 6, bonus depreciation deduction. Number 7, utilities. Number 8, mortgage loan interest. Number 9, credit card and loan interest. Number 10, business cards and printing and copying. Number 11, property taxes. Number 12, property insurance and private mortgage insurance. Number 13, guest or host service fees. Number 14, office supplies. Number 15, professional development. Number 16, advertising. Number 17, cleaning and maintenance fees. Number 18, furniture, linens, and food. Number 19, repairs. And number 20, health insurance. Thank you so much for your attention. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.